Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
Financial Survival Network is presented to you by Regal Assets. Buy and sell physical gold and silver through your existing retirement plan, 100% tax-free with Regal Assets. If you want to include physical gold or silver in your existing IRA or old 401k, request your free investment kit, which was recently featured in the Forbes and Smart Money Wall Street Journal magazines. Call toll-free 855-678-6620, 855-678-6620, or visit regalassets.com. There's been a lot of talk about Chinese demand for precious metals, gold, silver, and anything else they can lay their hands on. And at the same time, there's been a lot of talk about Chinese counterfeit coins coming into the country. And who better to talk to than Barry Stuppler of Stuppler & Company? He's been in this business since the last bull market. I won't give any numbers, but it's a while. Barry, how are you today?
I'm doing great. Thank you for contacting me.
Hey, always a pleasure. So what's with the Chinese demand? Is it everything that it's cranked up to be?
Oh yeah. They're on a mission statement. They're trying to build up their gold reserves to where it's actually more than ours. They supposedly have over 1,000 metric tons of gold, and we're supposed to have about 10,000 metric tons, and they keep on adding. The latest report that came out today from the World Gold Council's report was that they picked up another 300. They imported another 382 metric tons, in addition to the fact that they are the biggest single country in terms of actually mining it and producing it. So all that goes into their treasury, plus another 382 metric tons went in the first 6 months of this year, which is a record pace. Plus, as many as 2 million of the Chinese people have gold accumulation programs where they accumulate gold every month. So little money is taken out of their paycheck. They buy gold, and they're just going gold crazy. They believe in gold. They've lived through some hyperinflation times in the late 40s and early 50s. A lot of those people are still around, and they believe that gold is the only way to go, and paper money is just something that you use to make transactions. But as far as savings is concerned, they're just building up their gold reserves.
Yeah, and if anyone's listened to financialsurvivalnetwork.com or gone to your site, we believe very similar. And in fact, the Chinese arguably, they invented paper money. And when they invented it, they also invented inflation with it. And that goes back to Marco Polo's time. So they've got a lot of experience with depreciating, declining value of fiat currencies. And evidently, at least 2 million of the Chinese have learned from history as well as the government.
It's not only just Chinese. I mean, we're seeing a lot of the BRIC countries, even South Korea, bought 16 metric tons. You know, it's interesting when you watch the gold market trade. It's been in this narrow trading range since March, from about 1550 on the low up to about 1630 on the high. And every time it gets down towards that low, 1570, 1580, all of a sudden it pops up on heavy demand. I was watching a trade about 3 weeks ago, I believe it was, and it was trading at about 1580, got down to 1580, and then all of a sudden it popped up like $10 in 2 ticks. I finally contacted somebody in London to find out what was happening. Somebody walked into the market and bought 3 metric tons. To get it up $10 on 2 ticks takes a chunk of gold. So we didn't know who it was, and then all of a sudden it was announced that the South Koreans bought 16 metric tons in July. So that just tells you that every time it gets to a point where it's at a very attractive level, 1580, 1590, now we're showing 1600 as good support, there are buyers. I mean, even yesterday it announced that George Soros and Paulson added substantial amount of more gold to their holdings. Paulson added another 450,000 ounces, and George Soros, who's supposedly been negative on gold, but he picked up 44,000 ounces of gold just in the second quarter of this year. So it's just amazing that the public isn't into the market, because obviously we have other issues. We obviously have an employment issue, we have a housing issue, and the general public isn't into the gold market. And domestic and international consumption in India and China is down because their economies are slowing down. But the central banks are stepping in. The major billionaires, major large corporations are stepping in, and they see gold at this level right now as being very attractive, and they want to own more, and they're just out there aggressively buying it.
Yeah, well, the interesting thing is that it's been, like you said, in this narrow channel for months now. And my experience when commodity stocks, whatever, trade in a narrow channel is that when they break that channel, they break heavily either to the upside or the downside. I don't see this thing breaking the downside of this channel, because every time it's attempted to, like you said, demand comes streaming in there, pops it back over 1600. So something's going to happen, some catalyst probably, that's going to force that market to break the 1630 range. And then what's to stop it from getting back to where it was?
Nothing. I agree with you 100%. I mean, we're seeing higher lows and lower highs. The channel is getting narrower, and the support is too great on the downside. So, yeah, it's very likely that it will break out, and whether it does it in the next week or the next month, it's going to happen. And if it gets to a point where you break through 1700, then there's nothing stopping it between that and the old highs of 1920. So, I mean, when it breaks, I've talked to a lot of my clients. They like either buying it at the low end of the market, or they want to buy it quickly if it breaks above 1630 and stays there for a day or two. So these are technical people that watch the charts, and they know that on the that obviously if you can pick it up closer to 1580, that's great. But if it breaks above 1630, Katie bar the door, get in quick.
And one other thing, when we talk about the market, because I follow it, probably not like you, because I'm from a different vantage point. But one thing I've noticed is that gold has been putting in, up until today, $2, $3, $4 increases. And then it gets to a certain point and it gets slammed back down. And then it begins that process again. That's the way it traded largely up until around a year ago last spring, where it would make these little incremental gains, get up to a point, then get slammed at a higher low, and then go up from there. And it seems to me that behavior has returned, which seems to be more bullish than to have these major moves, $50, $60 in a day, which seem to evaporate rather quickly.
Well, those are day traders. Many of the day traders are within a narrow channel. They have very short stops. They trade it when it gets towards the higher end of the range. They'll sell into it quickly, but they've got stop loss executions already computerized, so that if they're wrong and it breaks out, and they're looking to pick up maybe $8 to $10 on the downside and have maybe risk a couple of dollars on the upside. So they have a very narrow trading range. They have programs set so that the program trading kicks in. But the interesting thing, if you look at it just from a fundamental basis, it's been trading here, building a tremendous base for the last 6 months. And when you're trading in this narrow of a range, and after obviously gold's gone up 20% a year for the last 11 years, so I mean you've got definitely a solid bull trend in place, and you've sold off from 1920 I think it was April or May,
right? And
now you've come down and you've traded in this range for over a year, and now all of a sudden you've built up a nice little base. The market shows good support, and when it breaks out, I mean, it runs quick, and you could easily see 50 to 60. When it breaks above it, you could easily see $50 to $60 up days, and that only represents 3%. I mean, it doesn't represent a lot in a day, and when it has a history of doing that. And
sure. We've seen it over and over. So what do you say to people who said, well, you said it was going to keep going up last year, and now we've been correcting for a year, so what do you know?
Well, the fundamentals are out there. I mean, the fundamentals for gold look extraordinary. It's just what you're looking at on a day-to-day basis. What's happening with QE? What's happening in Europe? There's been some European banks that have been somewhat insolvent. They've had to sell some gold into the market. The IMF has stepped in and bought gold. There's been a lot of trading in the action, and the long-term fundamentals have never looked better. However, the intermediate information of what's going on, if some bank in Europe that's insolvent that needs to build up its euro reserves or its dollar reserves, probably more likely, has to sell a couple metric tons, there's buyers. I mean, if they come into the market, there's buyers. Obviously, the Koreans proved that last month.
Oh, yeah.
There's buyers in there, but you're dealing in a geopolitical situation between what's happening in Europe, what's happening in Asia. Just today, the Chinese financial minister, announced that they're going to kind of loosen up their monetary policy because they're concerned about a recession. So that took a $10 increase in the price of gold. So you're seeing all these factors come into the market, and it's hard to predict the short term, what's going to happen in the next 3 months or 6 months or whatever. But the long term, I mean, just look at what gold's done over the last 11 years. It keeps trucking. It keeps averaging up. The fundamentals haven't changed. They haven't stopped printing money. They're still doing that. So
yeah, I mean, that's for sure.
It's going. It's not just domestically. It's globally. They're printing money. So paper money, in terms of gold, in terms of the value of paper money, just looks attractive and looks very cheap here, and looks like it's going to be a lot higher. And whether it's going to happen, like I said, next week or next month, it's going to happen. I mean, the fundamentals are there, and nothing has changed. If they start balancing the budget, then we'll talk about changing things. But that doesn't look highly likely, not particularly in a political year like this. And regardless of who comes in, whether it be a Democrat or a Republican, it's a no-win. They've got to continue the government. They've got to keep doing these deficit spending. You're already in a trap, and the only way out is obviously to keep printing money.
More of the same. The more things change, the more they stay the same. Yeah. On that note, Barry, we got to get going, but to find out more about you, to read your blog, where should people go?
Please go to Stuppler.com or Mint State Gold. I publish a daily market report on what's going on. It's in the upper right-hand corner. There's also information if you'd like to get involved in some of our concern about Chinese counterfeits. You can read about HR 5977 and maybe send a letter to your congressman or an email to your congressman and stop some of these Chinese counterfeits that are coming into the country that are obviously causing a lot of loss to consumers.
Yeah, that's a little scary notion, and we'll talk about that next time. But thanks for being on FinancialSurvivalNetwork.com to hear this interview and all the others we've done with Barry, as well as other notable financial luminaries, FinancialSurvivalNetwork.com. Barry, we'll talk to you again soon. You be well.
Take care of yourself, sir.
Thanks.